We just heard your call on getting defensive, so push back on some of the stuff that they said.
Yeah, so look, I mean, we turned defensive in June. We upgraded utilities at the time, and we had been sort of signaling this call all year that at some point this year we felt like the peak rate of change would be in, the peak in 10 years would be in, and that would be the time to get more defensive. And so we timed that quite well. In fact, defensive sectors performed extraordinarily well in June, better than we even hoped, quite frankly. And so the market is telling us in no uncertain terms that it is worried about growth decelerating a little bit. It is worried about the fact that rates may be peaking here and what the signal is from that. The curve is flattening. Okay, so I don't think there's any mystery. I think it's happening. And as we like to say, we have our views. We have, are fundamentally based, but then we like to verify them in the market. The market is verifying our views across the board. Whether or not we get a major correction off of this, meaning 10% or more, remains to be seen, but the rotation is happening. And that's as important as making a call on what the S&P is doing. You need to be positioned in the right places. So we do think this defensive leadership could persist. The cyclicals are underperforming. We think it's a function of growth decelerating, which is pretty visible. Trade is a risk we don't know about yet. The Fed is tightening pretty deliberately, and the market doesn't like that. We've talked about that all year. And so these are the variables that are forcing people to move more defensively.
Mike, as you say, trade is a risk, which by definition means we don't know whether it's going to happen or not. Talk about the decelerating growth. How much of that is just because globally we're taking liquidity out of the marketplace as the central banks step away from QE? Yeah,
let's separate the two. So the first part of our view that growth is decelerating is going to happen whether trade gets resolved positively or negatively. That's baked in the cake, as I like to say, right? The PMIs were so extraordinary last year. Growth is so extraordinary today, which, by the way, the PMI signaled that. GDP growth at 4.2%, that's not sustainable at that level. Final sales at 5.1%, those are peak numbers. Okay, so it's going to decelerate. The question is, will it decelerate into something really ominous like a recession? Right now, we're not making that call because we don't know, but the risk is out there. If the trade thing really escalates in a way that's damaging, it could get much worse next year.